Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, I hope you all had a wonderful Thanksgiving. Now it's back to reality. It's the 1st of December. December can be a very treacherous month, and these are things you really should be aware of. The first 2 weeks of the month are pretty good, but after that the volume gets very thin and movements can become very erratic because of the liquid markets. So let's start off with Apple. Apple has had a fabulous move, but I've drawn a trend line in to show you how we've hit these tops, and every time we've hit these tops, you've sort of fallen back but moving sideways. I think we're going to see something very similar. We're going to fall back, move sideways, but eventually I see Apple going to about the 140, 145 level. So that looks very good. Plus, all of our trade triangles are still very, very positive. You can see that right here from $66 on the monthly. The first trend indicator we saw for the upside on Apple was $66. We're currently 116, so it's substantially higher, about $50 higher, and also the last weekly was 102. So again, things still look very, very good for Apple. This is crude oil. As you can see, we've just been straight down, and we're seeing today really the first signs. We've dipped below the $65 level early today. It's a new low. We recorded in this market 63.72 was the low, and we've come back with 67.35. So the market has probably, in my estimation, is we sort of hit some sort of base level around 65, but that would be like picking a bottom, which is something we don't do. So again, all the trade triangles are negative, so there's no indication that this market has turned around yet, but this could be a first indication of a potentially start of a base building period for crude oil. Gold has seen a sharp run up. You can see that today we're trading on $1,182.58 right now, and that was much, much lower this morning, actually trading at $1,150. So it's rallied 30 some dollars from the low, very similar to this move right here, but something could be going on in gold, and I want to share that with you. First of all, let's just scope this out just a little bit further. Let's go to like a 2-year chart, and let's go to a max chart. And this is what I will share with you. I want to take the trade triangles off, make everything very clean, very simple, so we all can understand this. So going to our Fibonacci tool, which is right here, we're going to click on the all-time high price for gold. Remember, this is when gold was going to go to $2,000, never got there. So we drag it to the lows, and you can see we've had a 61.8% correction from the last major correction, which was back on the 24th of October in 2008. Again, we've corrected 61.8%. That's a classic Fibonacci number. We want to see some base building here, and we could be starting 2015 could be the year of the bull market in gold. So please pay attention to that next year very carefully. But again, right now the trade triangles are negative. No reason to pick a bottom, but this could be an indication that we've reached a classic Fibonacci retracement. Here we're looking at the NASDAQ composite. You can see we have moved sort of sideways, but really the big move really took place in October when we hit a low and we just rallied like crazy from the 4,100 level to the 4,800 level. Amazing move. But we've seen some pullback today, some profit taking. We are a little bit overbought. You can see that right now, but the trend, according to our trade triangles, is still very positive, and we expect that to continue. I think we'll just consolidate a little bit around these lows, but I do think we'll have another push up in the NASDAQ. Pretty much the same pattern in the S&P 500. We're seeing a pullback, overbought, but I think we'll see this market continue to go higher, and after we consolidate a little bit in December. Pattern remains very positive for all the indices, and the Dow is no exception. We expect this market to continue to move higher, but we may consolidate first of all, and that's what we're looking for in all the indices. Here's one stock we're looking at is Nokia. The symbol is NOK, and you can put the trade triangle weekly in, and you can see it hit today at $8.31. It's currently $8.32. We are above the 50 line in the RSI, which is a good sign, and we have broken a trend line, which is right here. So again, this looks to me like the market wants to go higher. As I said, all of our trade triangles plus 100 indicating a strong trend. It has historically been a little choppy, but again, that's a signal we received today. The other signal we saw in our trade triangles discovery mode early this morning was DTV, DirecTV, and that looks as though it wants to go higher. It has a signal here. However, every time we've had a signal, it's sort of flattened out. I think a better deal would be just to be a little bit more conservative and scope this in. And if we see this market close over 88, I think that would be a really strong sign that this market's headed high. You can see we're above the 50 line. It looks very positive to us. And I think the key thing is I'd rather be long than short. And if you are long, you know you really want to be out of the market if it goes below 86.33 on a close-only basis. So there you go. That's what we're looking at today, the 1st of December. Have a great trading day, and don't forget to leave your comments below this video, and we'll do our very best to get them answered as quickly as possible. Have a great trading day, everyone.